For decades, the silver market has operated on a simple, unspoken agreement that the price you see on a screen, the paper price, is the same as the price of a real, physical bar of metal you can hold in your hand. But what if that agreement is breaking? What if the digital promise is no longer trusted? Right now, a seismic event is unfolding under the surface of the financial world, an event so significant it's threatening to cause a great decoupling between paper and physical silver. Welcome to the Bullion Signal Podcast. We're here to help you understand the major shifts in the world of precious metals and macroeconomics so you can protect your wealth. Today, we're diving deep into a shockwave that's hitting the COMEX, the very heart of the silver market. Everything that's happening right now, it all starts with this one very large number, 47.6 million. Just let that sink in for a second. In the world of physical precious metals, a number that big doesn't just raise eyebrows, it sends tremors through the entire system. But what does it actually represent? That's what it is. In less than a single business week, buyers on the futures exchange demanded delivery of 47.6 million ounces of physical silver. Now, you have to understand, this is not normal. Most futures contracts are settled in cash or rolled over into the next month. It's a paper game. But this is different. This is a massive group of players stepping up to the window and saying, we don't want the paper anymore. We want the metal, and we want it now.
So, to really get a handle on what this means for you, we're going to break it all down. First, we'll look at the shock itself, the sheer scale of what just happened. Then, we need to understand the arena where this is playing out, the strange world of paper versus physical silver. After that, we'll look at the red flags the market is waving, the signs of extreme stress. We'll explore the powerful forces driving this unprecedented demand. Then, we'll talk about the potential endgame, this countdown to a possible inventory default. And we'll wrap it all up with 3 undeniable facts that the data is screaming at us today.
All right, let's dissect this thing. What does a vault drain of this magnitude actually look like? Who's behind it? And why is it sending such a powerful message to the market? The details here are absolutely critical.
When you dig into the numbers, the scale is just breathtaking. We're talking about nearly 10,000 futures contracts, all demanding physical delivery at once. But look at the dollar value, over $2.7 billion. This tells you right away this isn't a flash mob of small retail investors. This is the footprint of giants. We're talking about large institutional players, hedge funds, maybe even sovereign wealth funds making a coordinated, strategic move out of paper and into the hard asset. To put it in perspective, the amount of silver they claimed in just 4 days is what it takes a top 10 mining nation an entire year to pull out of the ground. That is a massive bite out of the apple.
And the impact on the immediately available supply has been devastating. Think of the COMEX vaults like a retail store. That 47.6 million ounces didn't come from some infinitely stocked warehouse. It came from the shelf, the small portion of inventory explicitly marked for sale. And in just 96 hours, a stunning 60% of everything on that shelf was spoken for. The store is being emptied at a speed nobody thought was possible. So why is an empty shelf at the COMEX such a terrifying prospect? To understand that, you have to understand the fundamental and frankly bizarre structure of the modern silver market. It's a tale of 2 completely different worlds that have, until now, pretended to be one and the same.
And the roof over both those worlds is the COMEX. It's the command center, the main exchange where futures contracts are traded. It's the place that sets what we all know as the global spot price or paper price of silver. For all intents and purposes, the COMEX is the price-setting mechanism for the entire planet.
And here is the core conflict. On one side, you have the world of paper silver. This is a universe of futures, options, ETFs, essentially IOUs. They are promises for silver. And because it's a digital world built on leverage, you can create an almost infinite number of these promises. On the other side, you have physical silver, real, heavy, tangible bars sitting in a vault. This world is governed by the laws of physics. It's finite. You can't just print more of it. For decades, the system has worked because everyone agreed to pretend that a paper promise was just as good as the real thing. What we're seeing now is the market calling that bluff in a huge way. Now, even within the physical world of the COMEX, there's a critical distinction you have to know. There's registered inventory and there's eligible inventory. The registered pile is the stuff that's ready to go. It's on the front shelf with a price tag on it, available for immediate sale to settle a contract. Eligible silver is different. It's also in the vault and meets all the quality standards, but it's not for sale. Think of it as being in the back warehouse, belonging to a private owner who is just using the vault for storage. The historic drain we're witnessing is being pulled directly from that much smaller registered category, the front shelf. And that's what makes it so dangerous. This isn't happening in a bubble. The market itself is sending out massive, undeniable distress signals. It's like the dashboard of your car flashing every single warning light at once. The system is screaming that it is under intense stress. And the biggest, brightest red flag is a condition called backwardation. In a normal, healthy market, the price for silver to be delivered next month is a little higher than the price today to cover costs like storage and insurance. Simple enough. Backwardation is when that flips upside down. The price for metal right now becomes more expensive than the price for metal in the future. It's the market screaming, "I need it now, and I'll pay a premium because I'm afraid it won't be here tomorrow." It is the single clearest indicator of an acute physical shortage. And then you have the sheer mind-bending speed of this whole event. This chart really puts it into context. That demand we saw in the first 4 days of December doesn't just squeak past the monthly average for the last few years, it completely dwarfs it. It's already challenging the absolute panic buying peaks we saw during the global shutdowns. This isn't a gradual trend. It's an aggressive, forceful, and unprecedented physical offtake. So, this all leads us to the billion-dollar question. Why? Why is this happening right now with such ferocity? Well, market analysts are pointing to a perfect storm of powerful forces that have been building for years, and now they finally converged. First, there's the relentless and growing industrial demand. Silver is not just a monetary metal, it's a critical strategic commodity. You can't build solar panels, electric vehicles, or 5G networks without it. This demand doesn't care about the price. It's inelastic. Manufacturers have to buy it, and when they use it, that silver is gone forever. Second, we're seeing huge sovereign buying. Nations are reportedly treating silver as a strategic reserve, stockpiling the physical metal. And third, and maybe most importantly, it's the ultimate hedge. In a world drowning in debt and currency devaluation, smart money, big money, is desperately seeking a safe harbor. They're trading their paper claims on wealth for a real, hard asset that can't be printed into oblivion. And the price is finally starting to react to this physical reality. As of December 4th, 2025, silver's year-to-date gain is a staggering 94%. For years, people have argued that the paper price was artificially suppressing the true value of silver. This price action suggests the leash is finally snapping. The price is being forced to acknowledge the truth of the physical squeeze. So, where does this all lead? What happens next? If this trend of draining the vaults continues, we're not just looking at a higher price. We could be heading for a true crisis point for the entire paper market structure. The countdown may have already begun.
This timeline lays it out in stark terms. We're already past the point where 60% of the ready inventory is gone. At the current pace, projections show the for sale vaults, the registered inventory, could be completely empty by the middle of December. That sets up a huge moment of truth on December 23rd. That's the final delivery deadline for anyone who sold silver short, betting the price would go down. They are on the hook to deliver physical metal they don't have into a market that may have nothing left to sell.
And what happens if they can't find the metal to deliver? This is what some seasoned market analysts are warning about. Michael Oliver calls it a potential traumatic repricing. That's a clinical term for a price explosion. It's the moment the paper price is forced, violently and suddenly, to catch up to the reality of physical scarcity.
When an unstoppable force of physical demand meets an immovable object of a heavily shorted paper market with no inventory, the only thing that can give is the price. And it can give in a very big way.
Okay, let's step back from the projections for a moment. Let's cut through all the noise, all the speculation, and focus on what we know for sure. The market data is giving us 3 core, undeniable facts right now.
Fact number 1. The drain is real. This is not theory, the numbers are public. The most aggressive raid on COMEX deliverable silver in modern history is happening as we speak. Fact number 2. The system is under extreme stress. Deep backwardation isn't an opinion, it's a data point. It is mathematical proof that the market is terrified of a near-term physical shortage. And fact number 3, the price is finally validating this reality. A 94% gain in a year isn't a fluke. It's the market waking up and repricing the metal based on this new, tighter physical world.
When you put it all together, you realize this isn't just another bull market rally. This is being seen as something much more fundamental. It's being framed as a vote of no confidence, a mass rejection of the leveraged paper system that has controlled the price of silver for 50 years. The largest players are no longer content with the promise of silver. They are taking the silver itself and walking away from the table.
And that leaves us with one final sobering question that cuts to the heart of our entire financial system. The modern precious metals market, and arguably many other markets, are built on a fragile promise. The promise that the paper claim is just as good as the underlying asset. But what happens to that promise? And what happens to the price when everybody decides to call and collect at the exact same time? Thank you for joining us on the Bullion Signal Podcast. If you found this analysis valuable, please help us spread the word by liking, sharing, and subscribing to the channel. It helps us continue to bring you insights into these critical market events. Stay vigilant, and we'll see you next time. Just a quick reminder, this content is for informational and educational purposes only. It is not and should not be construed as financial or investment advice. You should always conduct your own thorough research and consult with a professional financial advisor before making any investment decisions. You are solely responsible for the choices you make.